Hello everyone and welcome to today's morning report on Wednesday the 2nd of March with me, Rich Market Analyst at Handset Markets. The European trading session has got off to a decent start again, and this has come on the back of strong gains on Wall Street last night actually. We had just slightly better than expected ISM manufacturing data. Even though it was still in contraction territory, the market took that as a positive because it was up at 49.5, which beat the expectations of 48.5. And it sort of has certainly driven gains in Wall Street, and that sort of filtered through the Asian session into the European session as well. And just generally, let me show you just a series of charts that I think show you how risk appetite is improving. Now, first of all, we've got the oil price, which continues to sort of move higher, pushing towards this WTI resistance at 34.80. Yesterday almost hit it and just came off slightly, and just slightly lower today, but still the uptrend is intact. Now, Brent crude has already broken its equivalent resistance. Look at this one as well. This is copper. Copper basing out. Copper performing a very decent looking base pattern there. 3 months base pattern on copper. Head and shoulders reversal. Certainly suggests continued improvement. Also the treasury yields as well. If they come through, so they're not coming through. Anyway, yeah, so here we go. So treasury yields pulling higher. Strong rebound on that 10-year treasury yesterday, certainly suggesting improving sentiment there, and also the 2-year continues to rise. So this is all sort of pointing towards improving US, and that will help to strengthen the dollar, and lo and behold, we're getting this dollar rally. And that dollar rally continues to move through. So we are still seeing these improving signs in the across the financial markets really, and that is helping to generate positive sentiment across the board really. That lower oil price today, will that scupper or will that hold back a rally today? Maybe, but I certainly wouldn't say that you're sort of looking anything negatively today, despite the fact that we are slightly lower. About 1.5% on WTI, about 0.5% on Brent crude, so nothing too significant to sort of derail the rally, but certainly at the moment we're being very much on the positive side, and the glass is half full. So what have we got to look forward to today? Well, not a great deal of data. We do have the UK construction PMI. 9:30. Let's expect it to be 55.5, so basically where it was last month, just slightly improved. But construction is around about sort of 5-6% of the UK economy, so it's not going to do a great deal for sterling. But the ADP employment report number at 1:15 could have an impact on the dollar. 190,000 is the expectation there, so it's pretty much in line with what the feeling is for payrolls on Friday as well, which I think is around 195 for the expectation. And ADP does tend to have a pretty decent sort of take on payrolls on Friday, so the market does look at it. It's not entirely accurate from month to month, but still it is a decent guide to the headline number. And then at 3:30 we've got the EIA oil inventories report, and that is expected to be again an inventory build of 3.5 million barrels. So that wouldn't be helpful for oil, but certainly you could see a bit of volatility around 3:30 around that release. So that takes me to my chart of the day, which today is the DAX. And the DAX is, as I said, improving sentiment, and we can see that through the DAX. Sharp gains that we've seen off that low. 8,700 low, big rebound, and it's now through the key resistance, the key near-term resistance at 9,600, which was a pivot line from the late January lows, and then performing resistance over the past sort of couple of weeks, and that broke out strongly yesterday, and we've continued to move higher today. Now we have got a gap breakout. That gap is at 9,719, so yesterday's close is the breakout gap. You can see it on the hourly chart here, and it hasn't yet filled that gap, so that is an interesting sort of thing to watch. Maybe that gap needs to be filled. Gaps do tend to fill, although there is quite a few gaps on the DAX that don't fill, so gaps tends to be one of these markets that tends to see the gaps not necessarily filled but that is open, so you could see a bit of a dip back into that, but certainly around that well, the last couple February highs of 9,580 are the initial support. You sort of say that's around the 9,600 round figure, but certainly the DAX is moving towards, now it's sort of again used that Fibonacci, the 76.4 fib level. I mean, I cannot believe the amount of times that the DAX has used these fib levels over the recent months. And it's moving certainly towards, I think, 98, 97, which is that 61.8% fib level. The absolute high is 99.05, which was that candle on the 28th of January. But there is certainly resistance around 9,900, isn't there? The initial resistance just sort of broke out 98.27. Was the initial resistance, sort of just slightly broke out, but sort of unwound back into it. So you could argue that's a resistance around there, but certainly the big resistance is 9,900. It certainly looks like it's moving towards there. Rally, little corrections, there are chances to buy now. You've got this uptrend intact on the DAX, and I think 9,600 as your sort of near-term big support area now. If you've got a correction in the sort of next day or so, I'd use that as your chance to buy. That would also be coming in around about where that uptrend is as well. So you're looking at improving momentum across the board. RSI is now at highest since December, which is when we first started really seeing the selling pressure coming through. And also stochastics very strong. MACD line is increasingly positive as well. So generally speaking, the DAX is far more positive, and the outlook is looking decent. So if we saw a break above 9,900, that would be a really big move. I think a really big technical turnaround, because that is a key high, key lower high there. And that would be the first really key lower high that the DAX would have broken in this rebound. So that is your key level there, 9,900. So I wish you good luck in your trading on the DAX today, and I'll speak to you later.